Good morning, everybody. It is 9 a.m. January 18th, and we are back again for the market open. It is really weird because it's been 2 days of not doing this thing, and it's become a part of my life now. So when you go 2 days without doing it, it definitely becomes weird. Obviously, there was a good reason why we were not able to do the market open for the last 2 days, and I'll get into that. But since the last 2 days, a lot has happened. I mean, we're going to talk for a couple of minutes, and then Alex Karp, Palantir'S CEO, has given his first interview of 2024. So we're going to be watching that. We got a lot of stuff that's happening in the macro. Stocks are actually doing very well in the pre-markets. It seems like we've had a bit of a sell-off for the past 2 days, even though the S&P has only been down 2% from all-time highs. But, it felt like the world was falling in terms of how bad it was. The markets are up so well this pre-market that NVIDIA is at $573. NVIDIA is like getting close to inching near $600. So we got a lot to talk about, a lot to discuss. And thank you all for being here. We've been gone, but now we are back. Real Baby Pluto says, thank God Amit is back. Without the market open, I've had to talk to my girlfriend in the morning before work. Oh my God, I love it. I love it. Miami Ren says, welcome back, Amit. Your live stream is equivalent to my morning coffee. Thank you all for being here. Let's get into it, and then I'll explain where I've been gone over the past couple days. Marcus, Power Napster, Sona, Mr. Seymour Duck, Richard, Sanjay, it has been too long. We are back, baby. Chris James, Tabor, STS, Sethi Roth, Aaron, he's live. I am live. Broccoli Bob, Billy, Sonam, Spanish Guitar. Sonam says, we miss you. You guys don't know how much I missed you. And we are back. Eziliel, Ken, Artishir, thank you for the $5 super chat. I love you, Artishir. Thank you for the $4.99 super chat. It means the world to me. Emmanuel, Sachin, Daryl, Tony, Matt, Sundo, Sam, Gerald, Harry, Sonny. Is that really you? Yes, that is really me. Okay, so the reason I was gone, I think you guys probably knew about this. I told you, but also if you kept up on my Twitter at all, you would have seen why I was gone. I went to California, and I didn't tell you guys why I went to California. The reason I went to California was because I was meeting up with Mr. Meet Kevin. On New Year's Eve, basically, I got this wild idea. Might have been a little drunk, but I got this idea. I was like, I have Meet Kevin's number because we connected before in the past. And I was just like, how crazy would it be if he let me do an in-person interview with him? Like, how weird would that be? Like, it would be really good for me. It would help me just, connect more with people in the finance space. Obviously, he's a very big name. And so in our YouTube finance space, if you get an interview with Meet Kevin, it's a big deal. And if I actually go in person and get to ask him about his life for 2 hours, maybe he would be more susceptible to saying yes versus just being like, no, I'm too busy. Because the guy, and this is the one thing I took away, I mean, just so busy because he works so hard. You can have whatever opinion you want on if you like him, you don't like him, you think he's whatever. You cannot deny the guy's work ethic. I mean, he's managing $50 million in a real estate startup, $50 million in an ETF, does YouTube consistently. It's just, it is a massive operation that he's running. And so I texted him that day on New Year's Eve, and I was like, I sent him a paragraph. I was like, hey, blah, 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 blah. I think people sometimes just make a lot of hate videos on you. And I would like to just do a real cool podcast, getting to know who you are as a clickbait sensationalism that exists around your name. And he doesn't respond for a bunch of hours. And the next, and I think in 5 hours, he's like, sure. And as soon as I got that text when I woke up, I was like, damn, that text worked when I was drunk last night. I had no idea. That was a drunk New Year's Eve text that I was like, all right, fuck it. Maybe it'll work. Maybe it won't work. And it worked. And I was like, holy shit. And you guys know I don't even drink that often, right? So that to me was just that was a good text to send. So we sent that text. He said yes. And then over the next couple of weeks, we just schedule it. And then I end up meeting him. And so if you followed me on Twitter, I kept it very mysterious. And the whole goal was just get people to not know what I'm doing. So here I was with Carlos. He picked me up. I said, I'm deeply contemplating what I'm about to do in California right now. And then I did another one, deeply contemplating what I'm about to do in California. People were like, oh, what is going on? And it wasn't that deep. I actually wasn't nervous for the interview at all. I was really excited for the interview. As I've watched the interview back, I think I did a really good job, quite frankly. I think the questions were good. I think you guys are going to like it. I think you guys are going to really like it. But so I made it a big deal about, what I'm doing. And then it was confronting me, Kevin. There you go. And so it was pretty cool, dude. He gave me 2 hours of his life. We were able to talk. We were able to discuss a lot of different things. His studio is insanity. I'll show you guys some pictures later, but it's literally it's a huge, it's one of those things I wish I had one day in terms of his studio, because it is just so incredible in terms of the operation they have going on there. This is him go-karting. I mean, he literally go-karts from his office to his house.
That is crazy, dude.
And so after the interview, he basically just invited me and Carlos to kind of see what he does every day, and it was just really cool. He has a whole team. His team was super nice. They were super fun. He's very bullish on Palantir. I can't wait till you guys see what he says about Palantir. He said they're the only profitable AI play. LLMs are commodity, and Microsoft Copilot is fake AI. When he said that, I was like, what? Because from the street, I've heard that Microsoft is the best AI. And he was like, no. People are just putting their money there to, have some type of safety, but it's fake. It's like no one gives a shit about, Copilot helping you type better. What matters is enterprises needing data. And so he was very bullish Palantir. He's actually not that bullish SoFi and Robinhood. So we'll talk about, the things he's bullish. And like he's, in terms of the fintech, he's bullish PayPal. For the same reason that Amir said on my channel a couple of weeks ago, which is that if they just grow a little bit, the valuation is so low that, the stock will probably do well. So, yeah, overall, guys, it was a really, really fun trip. I went in 24 hours, did what I had to do, did the interview, came back the next morning. Flights were good. No problems with the snow. I know Vitaly was stuck in Nashville for 3 days. I was LA to New York, very quick, easy. And we got in, we drove to his house, we did the interview. His team was really nice, super genuine people. Like Kevin was ready to go for 3 hours. Like he had no complaints around the time. He had no like, oh, I got to do this. He was just like, I'm yours for the next, couple hours and do what you got to do. And I think it was a good interview. We did about 40 minutes on stocks. We talked about Enphase, Nvidia, Meta, all of these stocks. And then we talked about his life and how he became who he is today. So it was awesome. It was really, really, really awesome. Unkit says, hey, Amit, I've been watching mostly silently for the last month or two, and I want to say the content is really great, and I watch almost daily. Keep up the good work. Thank you for being here. The final thing I'll say, and then we'll get into the actual market open stuff, is I left California thinking, oh my God, I don't work hard enough, because this man just works so hard. And no matter what you think about him, at the end of the day, everyone is trying to be successful. And to be successful, you have to work hard. It is the only variable that can make up for, any other skills you may not have. And it was just incredible, seeing how he works and seeing his work ethic. And so I am eternally grateful for the people that are here on this channel, for the people that come back every day. I've done the market open, the extended version for we started in October. So basically 5 months now straight. The only 2 days I missed were the last 2 days. And so I think the level of consistency I have had on the show has been there. Now it's a question of how do we make the show even better every day? And that just requires me upping my skills. And so very excited to be here. Thank you all for being here. I got a ton of messages of people saying they missed me. Obviously, it meant a lot that people cared enough to reach out because the content wasn't there daily. So I'm happy to be here every single day. We'll have the market close today. We have so much stuff to talk about. It is absolutely insane. And I think I got a lot of advice from Kevin on how to make this even better and keep it going. So super, super excited. I can't wait till you guys see the interview. The interview will be on a new channel. So I'm launching a new channel. It just doesn't make sense to put it on my channel because my channel is so Palantir related in terms of like the actual videos that come out. So I think, guys, I'm just going to start a new channel where I can talk about anything in the context of the macro. I don't know what I'm going to call yet. If you guys have any names, let me know. But it should just be a new channel where, like if I want to talk about what's happening with Jerome Powell, like I could talk about it on that channel. Because on this channel, like the videos are based on a Palantir audience because that's what the audience wants, right? On my live streams are my live streams, and the audience wants certain types of videos. So I think I'll just start a brand new channel, and this interview will be the first interview on that channel. And we'll talk, all things finance, macro, all that good stuff. Okay, cool. So let's start off with the first news of the day. Palantir CEO Alex Karp, brand new interview on CNBC. Here's a 6-minute segment of it. There's so much stuff going on in the world of Palantir. He's releasing a book. Karp is releasing a book that came out yesterday. Like we are going, like as a Palantir content creator, this is heaven. We are going to have content for days. So here's Karp on CNBC. Let's see what he had to say.
Out by asking him about his recent trip to Israel.
The main reason I went is because we corporate leaders, especially corporate leaders who are running publicly traded companies, need to stop just parroting things we don't believe when it's popular and then being silent when it's a little more controversial.
What do you mean by that?
Well, we have all these, we had a movement I think is fading away, largely understood as wokeism, where people said, quite frankly, in public, lots of things that no one believed they believed in private. Now with Israel, most people in positions of authority realize that what happened on October 7th was one of the worst terror attacks the West has ever seen, arguably the worst act of terrorism and sexual barbarism the world has seen in 100 years. And it is incumbent on us to actually not only speak loudly in private, but occasionally show what we mean in public. And so core to defending the West for me was not just me going to Israel. I'm very well known there. Our products are used there. I'm proud of that. But bringing the whole board and saying, look, you can debate lots of things about Israel, but the people who are attacking it are calling into question the very existence of a thoroughly democratic Western country that is defending our rights. And we cannot just speak loudly in private. And one of the key issues that you find, including here, is, people want to talk about rebuilding trust. The elite, no one trusts the elite. Yes, but how could you trust the elite if everything you're saying is a half-truth at best?
You ran a full-page ad in the New York Times after the tragedy that we saw in Israel. You were the only company that I saw do anything like that. What was the reaction to that from your fellow CEOs?
Look, there are a lot of people who are like, you're beep, beep crazy. You're going to get in a lot of trouble. People are going to call up and yell at you. And my reaction to them was, is never again mean I never take the risk of my own career? Is like, it was always hard in history to stand up against discrimination, brutal acts, pogroms, sexual violence. We are at the point where you have to stand up. And, the interesting thing is, in private, a lot of people agree with me. Their position is, but you can't say it in public because you'll offend someone. And this is exactly wrong. You can no longer live in a world where you are not saying something that will offend, you only say things that will offend no one. Like, if you're going to defend something, you have to defend it.
But then what's your view about companies that were speaking out on lots of other social issues that I think you don't think that they believed in?
So the core reason why people who are basically decent, wonderful people in America have basically no trust in the elite is everyone senses that they spoke out on things they actually don't believe in, and they set a precedent. The precedent that they set was, I'm going to speak out about moral causes. Okay, now you have a crucial moral cause. Like, you can be against what I'm saying. You could be against standing with Israel. You can't say you don't have an opinion. You don't have an opinion on this. You have fallen on your head. And if there are people in corporate America who say, look, I never have an opinion. My opinion is the shareholders. I actually am sympathetic with them. But if you spent the last 5 years lecturing us about all sorts of things that no one believes you believe in private, you can't just wake up the next day and say, oh, I can't speak about this thing I believe, or say I have no opinion. And it is crazy ridiculous. And
Karp is going off.
Undermines the fabric of our democracy because no one believes it.
Let me ask you about what's happening here in Davos, because one of the conversations that we have not seen in large part is one about what's really happening on the ground in Israel, a conversation about anti-Semitism, the same conversation that's happening in institutions all over the world, but it doesn't seem to be here yet. It seems so very limited.
Davos has an important function. I live on a different planet. Like, on the planet I live in, climate is important. Fighting bigotry of all kind is important. The most important issue of our time is war and peace. And the absolute most important metaphor for that is, what do you think about what happened in Israel? And by the way, anti-Semitism as a kind of prejudice has always been the canary in the coal mine for your society isn't working, your university isn't working, you're not providing real growth to your population, and because you're not explaining why it doesn't work, you just go blame the Jews. And so, like, any enterprise that's about making the world a better place that doesn't deal with these issues is basically saying, I'm not really engaging in the problem. And this is not just a problem here. It's a problem with all sorts of institutions, from our higher education to fake discussions in the corporate America to international conferences. And I don't know why it falls on me to say the obvious, but this is obviously just shows you're not talking about the real problem.
Can you speak to your recruiting efforts and how you're changing them in terms of where you plan to recruit people from and how you think about what used to be the most prestigious schools in America?
Look, Palantir, in all modesty, has been way ahead of the curve. We test everyone. You went to Harvard, we test you. You went to University of Colorado, you went to go to community college, we retest you. In the 50s in America, if you were a Yale degree, Yale alum, and you got retested, you'd be offended. The legitimacy of our institutions is so much weaker. Everybody's going to move to our methodology. You have to retest. until we reform our institutions, I don't know what a grade is. I know what our test is. And
when you say reform our institutions, what does that mean?
Look, across democracy in the West, we have a large focus on what we pay, not what comes out. In tech, we have an absolute myopic focus on what comes out, not what goes in. And like, our institutions have to move from what did we spend to what did we get? And that's very, very scary, because the outcomes are unfair. And that's why I'm actually still a card-carrying progressive, because we have to take care of the people who are not going to benefit from the AI revolution, who are not going to participate, who need remedial help. But the reality of what the West needs to do in every institution is, it does not matter what you spend. It matters what you get. And by the way, if there's one lesson of software, the single thing that America does better than any other country, it's not input, it's output.
Yesterday.
Wow. I mean, look, there is a lot that he just said. The last thing he said right there, that he said, I'm a card-carrying progressive. This goes to the what happened in the 60s and 70s, where people would have their own socialist cards, right? And you would be carrying the card on you. Karp is such a unique and eclectic individual, because you've got someone who's a billionaire who is supporting Israel, which a lot of socialists and progressives, from what I've seen in the research over the past couple of weeks, don't want anything to do with Israel. But he's a card-carrying progressive. Why? Because he believes in taking care of other people. At its sort of basic fundamental core, he believes that there is a wealth inequality gap, and that we should take care of people that don't have as much money as other people. But he also believes in the nuance of civil liberties, the nuance of United States hegemony, the nuance of protecting he's against China, which is a communist country, but he's a card-carrying, theoretically, communist, right? So you've got all of this nuance that goes into someone like Alex Karp, which I believe makes him one of the most interesting people in the world to analyze. And I believe also eliminates the dogmatic ideology someone can cast upon Karp, because there's just so much nuance to how he thinks about the world. And so in this interview, I think we got a ton of nuance as well. I'll be going deeper into it on the Daily Palantir episode that I put out today. So that episode will probably be about like 1 or 2 p.m. I'll add, there's more parts of the interview. I think there's another 4 minutes that I missed on this, because this was cut here and there. So I'll go deeper and just break down every single part. But my raw thoughts on this are that he is unapologetic. He seems very confident before Q4 earnings. By the way, Q4 earnings are coming out. This was revealed yesterday, February 5th, which is kind of weird, because why is it coming out so early, right? Like February 5th, they usually do it in mid-February. I'm not sure why they're doing it so early. Here's the book, Palantir billionaire Alex Karp slams Silicon Valley, new book. It's called The Technological Republic. As a Palantir content creator, I could not ask for a better 2024 start. I'm getting a whole book to be able to analyze. I mean, this is just going to be fun stuff. So we've got that happening. And then obviously we've got the earnings that are coming out February 5th. It's after hours, which is cool. It's on Monday, which is cool. It's weird that it's so early. Usually they do their earnings February 20th, around that time, February 16th. So I'm not sure why it's happening so early, but maybe that's good. Maybe that's bad. Honestly, I have no idea. Hard to kind of read into it. But as of now, it does seem like they are doing earnings much earlier than before. Last earnings were also a week early. That's true. Q3, they know you're right. You're actually right. November 2nd was a week earlier from what it's supposed to be. So you're actually right that it was early. All right, we got a lot to talk about in the stock market, but overall, I'm going to be giving a lot more thoughts on Palantir's Alex Karp, all the news we've had, Davos. He speaked at some Axios conference. That'll be out soon. We have a lot of stuff to analyze already. So over the next couple of days, we've got a ton of content ready for you guys. And today I'll have an interview going deeper into them. Tom Nash did an interview with Shyam Sankar. So that was really cool as well. I listened to the interview. I thought it was good. Shyam, pretty much talked about the core things he's always talked about in terms of gap profitability, and, Airbus and Boeing and how they've been able to do partnerships. What I liked about the interview is that they were willing to give a retail investor an interview. Did not expect that from Palantir, given they've been so hesitant to talk with retail investors, but they did. Obviously, Tom was one of the first people on YouTube talking about Palantir back in 2020, right? So it was really nice that they actually decide to give a retail interview. Hopefully they'll do some more. But they're doing interviews left and right. They are being public. They're going everywhere. The CEO's coming out with a book. It seems like, you know what it feels like? It feels like they're ready to ramp up. If you guys were part of the newsletter, which you guys might not have been part of, and if you are not, shame, because you got to be part of this newsletter, dailypalantir.substack.com, you would have seen this in the newsletter. I'm going to share it real quick, and then we'll get into macro. TSM is up 8% right now. We got a lot to talk about with that, which is that Palantir had a boot camp with Accenture in India. I mean, like, so the reason I bring this up, there were 100 different attendees in partnership with Accenture learning about AIP in India. The reason I bring this up is because I think one of the reasons they're so public, and this is just a shot in the dark, okay, is maybe they're very excited about their growth to the point where they're willing to do more interviews. My thesis on why they were never doing retail interviews with like all the people on YouTube and stuff is because the company was not at a point, it was not stable enough where they felt they could do an interview. And like, if something bad happened, the interview went wrong, whatever, like, there would be pressure on the stock. Maybe they think that they're at a point of growth that it is sustainable and it is strong enough for them to do outreach and take broader risks with getting their name out there. Shot in the dark. Not sure if that's the case. AIP is making its way to India. So you're having a lot of international boot camps, which is why I think it's scaling well. I'll put this in the link for those, or in the chat for those that want to read this. But maybe that's the reason why they're starting to do some more retail interviews, and we'll see in the future if that's going to be the case. All right, let's get into macro. We've got a lot of stuff to discuss. Oh my goodness, these equities in the pre-market as well. Today might be a fun day in regards to how green it is. We've got a lot going on. Nvidia's at 573. I have no idea how Nvidia went from 493 to 573 within 2 weeks. But it's happening. It's up another 2% in the pre-markets. The market's excited for Nvidia. SoFi, I bought some SoFi yesterday. Hopefully I got the bottom, dude. I bought it at 730. I think I got the bottom. Maybe I'm wrong. We'll see. Look, they have earnings on January 29th. It's 11 days from now. I think they're going to be gap profitable, and I think they're going to fucking crush. And now, will the market reward them? No clue. Absolutely no clue. But my bet is that, well, first of all, if the earnings doesn't go well, I'll just keep holding SoFi, right? There's no big deal to me. But I bought a lot more yesterday because I was like, well, I mean, why not? Like, I think if they're gap profitable, they're going to do well. And like the stock should be better after they're a profitable bank. We'll see what happens. But I do think they're going to be profitable. There's really no doubt in my mind. Could I be wrong? 100%. I could definitely be wrong, but I think they're going to be profitable, and I think the market will reward it. Remember, their short float has gone from 16.5 to 13.3%. So the shorts have started to cover. It's just a question now of getting that short float under 10% so that the stock can breathe a little bit. And we'll see over the next couple of days if it can do that. Meet Kevin's PP is up 1.16%. Why? Because he is very heavy weighted NVIDIA. And because he's heavy weighted with NVIDIA, that's why it's going up. We talked about NVIDIA a lot. TFC, I forgot, guys. TFC had earnings today. The TFC is up 0.89%. I totally forgot TFC had earnings. I mean, you guys saw I started the live stream a little late. I slept in a little today because I had not slept for the past 2 days, just between flights and the interview and all this stuff. So I woke up at like 8:45 when I was supposed to start the stream. So I was definitely late today. I forgot Truist had earnings today. Oh my goodness. All right, I'm going to pull this up after the market open. Let me get their deck pulled up. I don't want to go through it right now. We got 7 minutes to the market open, but it seems like earnings were good because the stock is up. Holy crap, dude. How did I forget they had earnings, man? I completely forgot they had earnings. All right, I've got that pulled up. We're going to go through that after. I just woke up this morning in a daze, dude. I was so tired last night. And I did Finance Junkies last night. I probably shouldn't have. I probably should have went to sleep, but I was just so fucking tired. But I wanted to do the show because we hadn't done it in a couple days. Okay, so cool. So Truist is up right now. Robinhood is up right now, up 1.41%. Nvidia is up 2%. S&P is up 0.38%. Palantir is up 2%. I did buy Palantir yesterday, bought about 15 shares at $16.15 on Palantir. Goldman Sachs is up. CleanSpark is up 1.22%. Now, CleanSpark's gotten murdered over the past week. It's down 30%. So our little gamble on CleanSpark has not gone that well yet. But, we got about 12 months for these options to play out. Bitcoin thesis still intact. So we'll see if it happens. If it does, we 4X. If it doesn't, we lose some money. So we'll see what happens there, but that's doing okay. Let's go to the miners. The crypto stocks are all green in the pre-market. MicroStrategy's, wow. MicroStrategy's $500 in the pre-market. Robinhood's up 1.6%. Now, the reason I bought the dip on I bought the dip on Robinhood and SoFi is because I felt the sell-off was pretty erratic. I mean, Bitcoin is at the same price it was at. Bitcoin is at the same price it was at on December 28th. Okay. And if you look at Coinbase and MicroStrategy, they're down 30% from December 28th, even though Bitcoin is at the same price. So obviously there's been a very unique sort of price action in regards to how Bitcoin worked with a lot of these crypto stocks. But in general, it does seem like the crypto stocks have been sold off immensely, and maybe for, maybe they're oversold is what I'm trying to say. I know they ran up a lot in 2023. And I know Bitcoin, underperformed. I mean, Coinbase was up 400%. Bitcoin was up 160%, right? That's what I mean in terms of the delta of how they performed. So yeah, a sell-off was probably warranted, but I mean, Coinbase falling 30% in like 5 days was a little weird. Now, granted, I wouldn't be buying Coinbase right now because I'm very scared of their earnings. I don't really know how the market's going to interpret them. The ETF approval is not really the best for them. I know they have that institutional product, but it's about the volume of Bitcoin that's traded. And the ETF, at the end of the day, if it takes away volume of trading of the core asset that is Bitcoin from Coinbase, that's definitely not good for Coinbase. All right. No one can tell me that's like a great thing. Just because an ETF's approved and Bitcoin price goes up and like they make more money per transaction because they take a percentage of the fee off the price of Bitcoin, which is why I hate trading on Coinbase, because like if Bitcoin is higher, then my fees are higher to trade it, which is ridiculous. I should have a flat fee, which is like what Robinhood does. That's what I like. But they will make more money on transactions, but they might have less volume, and volumes are everything in the brokerage game. So I don't know. Coinbase is definitely not a buy for me right now, but I do feel like selling off 30% in 3 days is kind of ridiculous. So we're seeing a little bit of a upside momentum on that right now. All the miners are up a little bit right now. Marathon Ride is actually down in the pre-market, or Marathon's down in the pre-market. Ride is up 1.4%. Marathon was almost $29. Now it's $17. So obviously, if you bought the miners in the past couple of days, you're kind of fucked. I'm not gonna lie. Like, you lost some money, and I'm laughing through the pain. But if Bitcoin does what it needs to do and we get all-time highs, you're gonna make a lot of money. I mean, it's gonna be fine. The question now is, will that happen? And we got the halving event now. The ETF will sell the news. I also talked to Meet Kevin about this. He unequivocally thought that the ETF will sell the news, right? He did not think the ETF was going to be good. The halving event now, we'll see what happens from there. Big Seven, Magnificent Seven are all green. Apple up 1.9%, Microsoft up 0.65%, Meta up 0.73%, Google up 0.5%. Google, Sundar Pichai chopped off a bunch of employees last night. He said, you know what? We got to right size this business and correct the ship. So Google is laying off more people. Market likes it. Amazon is up 0.65%. NVIDIA up 2.19%. Just absolutely insanity that they're at 572. And Tesla at 216.80 right now, up 0.58% as well. Tesla was at 212 yesterday. Tesla's also been stuck. I think after earnings is where the market decides if they want to get Tesla up or not. But Tesla so far has not been performing too well. I did buy 10 shares of Tesla last week. No shares yet this week. And we'll see how they perform later today. Bookend Tackle says it's okay. Miners will run at some point amid. I agree. I think as long as Bitcoin does what it needs to do this year, and I do think it can have a chance of hitting all-time highs. There's just a lot of catalysts. I think, what January is reminding me of? January is reminding me of January 2023 when Tesla was at 100, Palantir was at 7, like everything was falling, and I think NVIDIA was like 150, and people were just so scared because now it's like, what's going to happen? I don't think it's the time to be scared. I really do think it's the time not to go balls deep into buying the dip. But if there's some positions you want to make a little juicier, there's no reason why DCAing at some of these ridiculous, like SoFi at 730 is kind of ridiculous. I mean, I know it was at 660 for a while, but it bounced back up very quickly because I don't think the valuation anyone thinks is meant to be under $7, right? So unless you're just mega bearish, but I mean, you could be bearish and you can still agree that valuation is just insanity. I think there are some opportunities here. I definitely think there are some opportunities here. We got about a minute till the market opens. We're going to hear from Tom Lee. He is also very excited about what's going on. He thinks the gains are going to come in the second half of the year, which is why the dip in the first half might be worth buying. We've got Ross Gerber. We've got Steve Eisman talking about bank earnings. And then Truist. I got to analyze Truist. I forgot we had earnings. It seems like the market liked their earnings. So we're going to talk all about Truist and keep it going from there. Thank you, everybody, for being here today. It means the world to me. Again, I was out of commission for the past 2 days, but now I'm back and very excited to be back. Again, when you come from meeting someone like Meet Kevin who just works his ass off, you just want to keep working. And also, when you don't do your routine that you've been doing for the past, at this point, year now with the market open, it definitely feels weird. So we are back. Thank you for being here. 9:30 a.m., January 18th. The stock market is now open. Wake your ass up. Here we go. It is time to discuss what is going on in the broader equity markets. And I didn't say stock market because equity market sounds cooler to say. All right, PayPal, $60.34, up 0.75% on the day. Alex Christ did an interview yesterday, the CEO of PayPal. We might watch that. It's a quick 4-minute interview as well. And he basically said, look, we're doing a ton of layoffs and we're going to grow. And so that's what the market needed. And that's why PayPal's green. We'll see if they actually perform. January 25th or something, they're having some event, or sorry, January 19th, 25th, I think is their earnings. So we'll talk about their event. I'll be live streaming both of those things and we'll see what it's happening. S&P 500, 474, up 0.37% of the day. All-time high, 478. So not sold off too much from their 474. SoFi, 757, not too bad. SoFi is up yesterday from the 5% down day that it had. So nothing too crazy right there. Open Door up 2.4%. American Airlines up 0.85%. We got to talk about all that Spirit Airlines stuff that happened. That was quite funny. Just the merger didn't happen. Down 60% in a day. Of course not. Why wouldn't that happen? Snapchat 1571 up 1.3%. United, I just got off their flights, 3803. Arc Innovation 4642. Meta 371. Coinbase 134. Bitcoin stocks are up. AMD is at 165. I want to go to their max because I think this is the all-time high for AMD. I am correct. This is the all-time high for AMD. I remember November 2021, they hit 167. Right now they're at 165. AMD has basically come up to all-time highs. I don't know if AMD's growth is enough to justify it. Okay? I could be wrong, but I don't know. NVIDIA's growth is definitely enough to justify it. So AMD, I have not done as much due diligence on as I've done with NVIDIA. I'm going to be learning more about them because I'm starting a podcast with my guy, Jose. We're doing a semiconductor podcast every week. First episode was supposed to be yesterday, but I was at the airport. So it's going to start next Wednesday, and he's going to educate me more on AMD. But the market's definitely said, hey, AMD, we're going to give you a premium along with NVIDIA. Let's go to SMCI. This is another semiconductor stock. SMCI, look at that, 327, up 3% right now on the day. TSM, I forgot to mention these guys. They had earnings today as well. TSM up 7%. Oh, my goodness. Up 7% on the day. I'm going to quickly pull up TSM earnings so I can try to get some raw numbers for you guys right now. Here we go. Okay, raw numbers on TMC Q4. We've got revenue of $19.62 billion, a little bit more than expected, and net income is also a little bit more than expected. So net income is basically in line, and revenue came in expected. TM's revenue is down 1.5% from a year ago, but with all the crazy stuff that's going on, the market was still excited. We'll go deeper into the numbers in a second, but TSM doing very well. Robinhood is up 1.27% on the day. Nvidia now 570. Palantir 1665, selling off a little bit. They're not up as much as they were up in the pre-markets, but they're also not down that much. They're definitely not red. TFC, did it turn red? TFC is still up. Wow, TFC's up 3%. Holy crap. That means they had a good earnings, dude. I have not looked at any of the numbers, but it looks like the market liked their earnings. It looked like the market liked $37. Yeah, we're back to 37. I'm so happy they had a good earnings because I kind of thought that just given everything that's going on, Truist, their earnings might not be the best and they might be stuck in this kind of purgatory of until the Fed cuts rates, the market's not going to be excited for them. But no, it seems like they were able to perform. And Truist, even if you don't own the stock, it's a big regional bank. And you want them to do well because that means financials in general are in a healthy space. And if financials are in a healthy space, then tech stocks can be in a healthy space as well. So it's really nice that Truist is performing. Spotify, 52-week high. We got in the chat from Kelly. Let me look at Spotify. Where's Spotify? It's probably 210? 204. Yeah, look, market's excited. Market's giving the momentum. Spotify will probably be profitable next quarter again. They were profitable last quarter, but very slightly. I imagine if they're not profitable, market's going to be upset. I think they've done enough layoffs. They cut like 1,700 people to the point where they're going to guarantee profitability. And then their user growth is just insane. The user growth on Spotify is like almost 30 million users every quarter. This is a product that goes viral. So at this price, I would not be recommending buying it personally. I think Spotify at this valuation is a little stretched at 40 billion, given the company makes like a couple $1 million of actual profit. So I would be a little hesitant here at $70 last summer. It was an asymmetric bet. At 205, it's not an asymmetric bet in my opinion. But nonetheless, it's doing well right now. The entire market is green. Alibaba's the only one that's down. Alibaba down about 0.47% right now. Should I sell my AMD? I don't think anyone should be selling these semiconductor companies because even if they're like, you could argue Nvidia's getting a little overvalued up. Let's do some math. It's a 571 minus 493 to start last week divided by 493. It's up 16%. Usually a stock like Nvidia cannot move up 16% as easily as it did. It was easy. It was just smooth butter, 16%, 571. But still, and same thing with AMD, I don't think you sell because I think the TAM is growing dramatically. And look, if we're not into a recession, which I could be wrong, maybe we're going to be in a recession. We'll talk about some macro in a second. If we're not heading to a recession, these stocks have just no reason to be sold off. Now, if we are heading into a bit of a sell-off, then maybe, yeah, you take some profits. But in terms of the macro thesis, if you're long for the next couple of years, AMD and NVIDIA, I mean, from the people I've talked to that have held them for years, you hold those suckers. You do not let those go. Because you could have said the same thing at $300 or $400, and if the growth is not stopping, it just doesn't seem like there's a reason to get rid of it. Enphase at 105. Tesla, of course, is red, 215, down 0.79% on the day. Cellularity is up 50%. Really? I remember the ticker symbol for Cellularity. All right, some of you guys probably don't know what Cellularity is, and if you don't, you've got to go to the what am I looking for? The place where they revalidate your Palantir authenticity shareholder card. Because Cellularity was one of the first SPACs Palantir invested in. They're a stem cell placenta-based therapy company. The company basically uses stem cells to do work to help pregnant women with their placentas. I mean, it's a very complicated thing. I did a video on it a long time ago. If you type in Amit Courageous Cellularity Palantir, it'll pop up. And why are these guys up 50%? There's got to be some crazy news that came out about their drugs or something. But wow. Okay, so that company's up 50%. Palantir does not hold them anymore, and thank goodness, because the stock sold off a lot. Truist selling off a little bit, but still green, up 1.84%. We're going to dive into their earnings in a second. The whole market's selling off a little bit, except NVIDIA. I mean, NVIDIA just keeps going higher, 573. The rest of these companies, like Palantir was at 1665, now it's at 1647. So market's definitely taking their profits on everything today. We're seeing a bunch of haircuts, except on NVIDIA, but we do have some green. Okay, let's get into Tom Lee. Tom Lee said some words yesterday. We have so much stuff to discuss, guys. We've got, I think, a longer show than usual because I missed out the 2 days. So we've got a lot of stuff I want to discuss, a lot of stuff that's going on macro, and we have to talk. Let me do some comments real quick, and then we'll get into Tom Lee. Amid Taiwanese semiconductor company TSM is up 7% on great earnings. Yep, they did really good. Revenue came in behind. Remember, TSM got sold off a decent. I think TSM hit the 80s because of all the China-Taiwan stuff that was going on. By the way, apparently China has acquired a ton of NVIDIA chips. And that's also one of the reasons why the NVIDIA stock is up right now, because somehow illegally or legally, based on some loopholes, China was able to buy a bunch of chips, which means a ton more revenue for NVIDIA, which is why NVIDIA is up right now, even though the US banned it. So we got to dive into that and see why that's happening. And we'll probably talk about it more on the market close as I read up on it. But that's another reason why NVIDIA is up right now as well. So one of the reasons to sell NVIDIA, if I had to come up with a reason, is that if the China thing officially stops happening, meaning they literally cannot sell them anything, because right now they're selling them something, even if it's not the H100s, that's where the revenue could not necessarily see a massive decline, but like the market could price in that there's going to be a little bit slower of some elements of growth. Waiting for Tesla to hit 100, 200. I am as well. If it hits 200, I think the whole chat is loading up, and so we will see when that happens, if that does happen as well. Why are Bitcoin ETFs down 20% when Bitcoin is flat in the past week? Again, this is I think. I didn't even check the ETFs. I thought you said Bitcoin miners. ARKB, where's ARKB? ARKB's at 42, and then IBIT, the BlackRock one, that's at 24. Yeah, they're down. The reason for this is because I think they opened at 47,000, right? Like they bought their Bitcoin the day Bitcoin was at least 46. Right now, Bitcoin's at 42, which is, a little bit of that 2-3% decline. So it actually makes sense that the ETFs are down, given that Bitcoin is down 2%, if they did buy at those higher levels. All right, Tom Lee, let's see what he has to say about the current markets.
So let's kick off the hour with a man who never skips. One of the biggest bulls on Wall Street, Fundstrat's Tom Lee. And I should have said that because you think the first part of this year, despite being bullish for the whole year, could be a little bit skimpy in terms of return.
Yes, Brian. I think we've got to digest that huge move you talked about.
Where's Tom Lee and what have you done with him? You were Mr. Bull last year. You were right on the mark about everything, and now you're a little more cautious.
Yeah, maybe it's because I skimped on the appetizers.
That's it. Well, that's later.
Yes. Yeah, I'm still optimistic for the year, but in the first half, and we got a glimpse of that today with Fed governors talking about not sure how many cuts they want to do. That's going to make markets nervous. And we got a pretty lousy Empire survey reading today, a regional PMI, and that's going to get people worried about a soft landing or hard landing. Those don't get answered for the next 6 months. So I think it's possible that we make a minor new high before the end of the month, and then we might have something like a 7% drawdown.
The Fed governor you're referring to is a gentleman named Christopher Waller, very smart guy, but he's not Jerome Powell. He is not the chair of the Federal Reserve. With all due respect to Mr. Waller, why is Wall Street suddenly paying so much attention to these one or two couple comments?
It's a fair question. We know for the last 2 years the Fed's been fighting inflation, so we know what that kind of regime and playbook is. Now we're moving to a playbook of, well, inflation is slowing. The Fed wants to keep real rates from getting too high, but we don't know what kind of cuts and when those happen. That's the nervousness we're going to have over the next 6 months.
I don't like to place too much credence in 1 month of data, particularly among some of these sort of smaller or more regional Fed surveys or surveys of this or surveys of that. You referenced one, though. This is the Empire Manufacturing Survey, folks. If you don't know what we're talking about, don't worry. 95% of you probably don't. It is a manufacturing survey around New York State. And usually it gets completely ignored by Wall Street. Nobody cares, except this data point. Correct me if I'm wrong, Tom. Came in so awful.
I actually don't know about this data point, so I'm very curious why Tom cares about it so much.
That even people who didn't care about this Empire survey suddenly started to care.
Yeah, it was pretty atrocious.
It was awful. But you think it's just one noisy data piece?
There's a lot of things that can make it noisy. We know supply chains are being rerouted right now, and we know markets have been tumultuous. And, we've seen that during weeks of market corrections, regional surveys often tank because the purchasing manager might just say things are worse, but it's because the stock market's down. So it's really hard to know how much is signal versus other things contributing to it.
But I want to be optimistic today, and you do remain bullish. 5,200, correct?
Yes.
On the S&P is your price target for the year. That is not changing.
Yeah, I think investors who are long-term oriented should really just ignore the first 6 months. We have a Fed that's going to be shifting from being really tight to accommodative. Earnings are recovering. We've got interest rates coming down. That's great news for consumers. And I think businesses in general have a CapEx cycle ahead. So, the stock market should do well this year. It's just, it doesn't mean it's a straight up.
I agree with Tom. I'm going to actually look up a little bit later that survey he's talking about because I've never heard of that survey before. So we'll add it into the knowledge repository. I'll look it up and we'll talk about it in the aftermarket close and discuss why it was so atrocious and why it matters. But to his point, when the market starts to take a little bit of a sell-off, you start to see, some of those people get nervous in these surveys. And these surveys, at the end of the day, they're trying to get sentiment, right? That same thing with consumer sentiment. Like if you can think consumer expectations for inflation are high or low, you can kind of gauge if they're willing to pay, which means you can tell how earnings are potentially going to do. It's one data point that matters. But in terms of his thesis, Tom Lee's been very consistent over the past couple of months that it's going to suck in the beginning because it can't just go straight up, right? Like it did in November, December, given we got a year's worth of gains in 2 months, right? So it definitely is going to have some level of suckiness before it gets back to going up. The weird thing about all of this, though, is like someone had a great comment in the chat. The market's like rotating into NVIDIA. It's like it's not really sucking yet. The market's at 474, all-time highs at 478. So in terms of a massive sell-off, I don't know where we're seeing a massive sell-off. Everything's green. I know like some stocks are not. Robinhood was at 13 now. Robinhood's at 1066. Like, yeah, that's a sell-off, but that's not crazy. S&P is at 473. NVIDIA's at 574. NVIDIA now even higher. It hit 575 a couple minutes ago. The thing where we're seeing the volatility is in the Bitcoin stocks. So if you're in the Bitcoin stocks, yeah, that's been tough. Left-hand side of my screen, MicroStrategy up 502. They're up today a little bit, but they're still been down 30-40% the past week. And then Mag 7 also, the only one in Mag 7 that's not doing well is Tesla. Microsoft's trying to hit $400, for goodness sakes. Microsoft at this point is officially higher than Apple. Apple's at 2.89 trillion, Microsoft at 2.92. So I don't really know where the roughness of the first half has been. And I know we're only 18 days into the year, so maybe we've got a lot of volatility to come until June. But we've got earnings coming up. Financial earnings have been great. I mean, some metrics here and there have been bad, but financial earnings have been phenomenal. If tech kills it, if Meta, Amazon, Nvidia, Tesla, these guys kill it, maybe there's a lot more upside we have in the first half of the year versus just downside and then upside in the back half of the year. AMD as well, killing it. I mean, yeah. Daryl says everything is green while I watch Tesla drop to the depths of Tesla was at 235. It was retaining that for the past 3 months. Hit 250 on the Cybertruck announcement, and then now it's at 214. I think at this point, Tesla's one of those stories where, like, it was funny because when Elon tweeted the whole, like, I need 25% of control or else I'm not going to be in Tesla, you thought the stock was going to tank the next day, and then it went up to like 220. So the dip was eaten up, but now it's sold off to 214. I think the market's a little bipolar when it comes to Tesla right now. Like, they don't know what to think. Market cap 680 billion. I did ask Meet Kevin about Tesla, and I think, guys, the interview tomorrow's Friday. I think the interview will come out tomorrow on the new channel. So I'm going to put the interview on a new channel. The first part will just be stocks, which is what most of you guys care about. The second part is going to be like his life, which like significantly less of you are going to care about, but that's okay. And we'll put it on the new channel tomorrow. I have timestamps in the entire thing. I edited it on the plane. And on Tesla, he said that the past 3 years have been a gift to accumulate more Tesla. To his arguments, and I think you guys are going to be really interested because he is very bearish on Twitter, very bullish on Tesla. His argument was basically, for the past 3 years, we've been given this opportunity to just get more and more Tesla. And when interest rates come down, he was very adamant about this. Tesla Enphase are going to that place you look up in the sky, and sometimes you have to, wipe your eyes, but it looks like the moon. That's where they're going. So to him, it is a pure interest rate play that when interest rates drop, and he believes that interest rates are going to drop significantly this year, even if it doesn't happen in March, he thinks it's happening. Tesla and Enphase are going to be the two companies that are executing at such a high level, that are so vertically integrated, that are just kind of perfect companies in EV and solar. Like, in terms of just management execution, like they are the top of the line companies that investors would want to back. When rates come down, those companies are going up. And so that is his overall thesis on Tesla, which means, look, I don't know if it's that scary to buy the dip on Tesla. And I've been saying this over the past couple of days. Like, I've been buying the dip on Tesla. Like, it kind of feels like this is the time to dip your toes. Now, maybe we're dead wrong. Maybe we're seeing 150. Maybe this is not the time to dip your toes. But, just given his analysis on interest rates and the actual execution of the company, even if there's going to be some production delays or whatever, like, when rates come back down and we get back to an environment that growth stocks really become the talk of the town, what other growth stock is there besides Tesla that is like, one of those premier companies? And then you got this bot that's like just getting ready to get unleashed into the wild. So, I think Tesla's actually, I think they're going to be fine, but we don't know when the bleeding stops for Tesla. KQ says, are interest rates really going to fall with shipping out of whack right now? So you're making a great argument about supply chains, what's going on in the Red Sea, the Houthis, all that stuff. I think that will be normalized. In fact, I got a notification from the Wall Street Journal last night that Pakistan launched some attacks because they were upset, and so they're getting involved in the Red Sea now. I will be surprised if in the next 4 to 5 months, this shipping issue, supply chain issue is still here. I don't think the Fed's cutting in March anyway. So in my opinion, I think hopefully within the next month, this whole Red Sea issue is resolved, not fully resolved, but at least mitigated enough to the point where shipping and cargo can stop having to take the greater Horn of Africa to be able to do the shipping routes, and it can get to a much more normalized pattern like it was for the past decade. And if we're not getting a cut in March anyway, then by that time, supply chain bottlenecks and inflation will cool down until May, and we'll see some upside there. On inflation, or some downside on inflation, which is upside for the market. And then we will see the Fed cut rates. Truflation has inflation right now at 2.14. Market has it at 3.4. There is obviously some lagging indicators if you believe that Truflation is looking at better real-time data. That starts to get cut. Interest rates or inflation is going to get cut like a rock. I mean, it's going to fall off a cliff when it finally falls off. And then the Fed's going to, potentially lower rates, not just by 25 basis points, but maybe 75 basis points. We'll see how it plays out. But what I think is going to happen is what I think I've been saying, and what a lot of people have been saying in the broader markets that are bullish, which is that inflation will come down one day to the point where at 2.7, 2.6, and the Fed will realize if they do not cut rates, they're going to induce a recession. And that inducing of a recession might just happen through deflation versus through inflation, which is why they're going to cut rates really quickly. And then stocks are going to go to the moon. That is the thesis for 2024. Will it play out? I don't know. Maybe I'll change my thoughts next week as we update going on with what happens in the macro. But so far, that seems like something that could happen. Okay, PayPal. You guys might have seen the interview with the CEO. I think we should play it anyway because we should discuss what's happening and just talk a little bit about his thoughts. For those that haven't seen it, you guys will see it now with me. Also, Reddit, some breaking news, is launching an IPO in March. Reddit is launching an IPO in March. I'm going to make a poll right now and ask if anyone here would seriously put in even, $5,000 into Reddit. Let's Let's see what you guys have to say, because that's an interesting one. Okay. So buy Reddit IPO. Let's see what you guys say in the chat. I do not like the Reddit business at all. It's advertising and that's fine, but their ads, dude, have you actually clicked on a Reddit ad ever? Like, it sucks. Like, it sucks worse than Twitter. Like, Reddit is just not the place where I would click on an ad ever. So, okay, we got 83% people saying no versus yes. I think last time Reddit said they were going to go public, it was like a $15 billion valuation. I think they're doing about $1 billion in revenue. There's no way I'm paying 15x revenue on Reddit. I mean, maybe the valuation changes. I think it's going to happen. There's no way. That was 2021. They were thinking of that stuff. But Reddit's just, dude, it's Reddit. Reddit's a toxic cesspool. Reddit's just, like, I don't even go to the Palantir part of Reddit, because you say anything, they just get so upset at you. It's just like, Twitter and YouTube are so much more welcoming than Reddit. And that's been my experience. Reddit has been useful in a lot of ways, but there are people that are like power users on Reddit that are like spending hours a day, like anonymously responding to people. And I'm like, I don't know. And you can say I'm doing the same on Twitter, but at least on Twitter, there's like a profile to some extent. There's like some level of more public interaction, whereas Reddit, it just feels like so anonymous. So I've never been one into Reddit. I know people do like it, but I don't think I can get behind the IPO, dude. The valuation would have to be ridiculous for the IPO to make sense. And it's not going to be ridiculous because they're raising money. So that's why they go IPO anyway. Okay, let's do PayPal. Let's see what Alex Chris has to say. We'll be live streaming his event tomorrow, and earnings obviously coming up. Let's see what they've got to say to get PayPal out of this mess. Here we go.
You since stepping into the role as the president and CEO of PayPal is Alex Chris. It's nice to have you here. Thank you.
Thank you, David. Good to be here.
It's good to have you. The analysts don't seem to love the stock right now. It's just the last couple of weeks. I've taken a look at a few reports. Mizuho yesterday, PayPal faces competitive pressure from A to Z, downgrade. Oppenheimer, PayPal, or persistent profitability pressure has them downgrading it. Morgan Stanley, slower than expected progress on strategic imperatives. BTIG, too much uncertainty, puts us on the sidelines. I mention those because I'm curious to get your response. So what do you say to these analysts to get them to change their mind, or how do you?
Well, look, we're an important company. We've got a quarter of the world's e-commerce running through PayPal. So that's why we've got 45 analysts following us. And, look, to be honest, there hasn't been a lot to celebrate over the last few years. I think innovation's been slow. The company's been growing, but hasn't been putting out real customer-backed innovation. And that's why I'm here. That's why I'm so excited about it going forward. So look, I love being an underdog. I will take all of that feedback and we'll shock the world.
I actually really did like when he said this. He's embracing the underdog mentality. It doesn't seem like he's folding under the pressure. And he said, we will shock the world. I think, they've got something cooking up. A lot of people have been making fun of PayPal. It's bullshit. It's old. Like, I do think they've got something cooking up there. They're still like 25% of e-commerce. There's something there. The valuation is stupid. The market just has to give it a little bit of growth to give it the premium. So let's see what he has to do. And look, maybe it's going to be a dud, but it seems like he's pretty confident on the trajectory of it.
Yeah, you think you're going to shock the world. How are you going to do that?
We've got an innovation day coming out on the 25th. Where from the first week that I got there, this was not about trying to figure out what to go do. It is very clear what we need to do. 24 will be a transition year for us, but it'll be all about execution, and it starts with innovation. So on the 25th, we're going to come out. We have very clear customer-backed innovation that we will be rolling out for consumers, for our merchants, for Venmo. And I think it'll be a good start to this year.
Anything you can tell us at this point? Obviously, I don't want you to ruin the rollout, so to speak. But when you say you sort of have a very clear idea of what you have to do, and then you say innovation, any specifics you can provide?
Well, look, PayPal hasn't delivered the value proposition to its consumers or its merchants over the last few years that I think we're capable of. We have more data. We see exactly what people are purchasing around the world. So we need to make a better value proposition for consumers, put more money in their pockets. For our merchants, we have the ability to leverage AI to deliver an incredible improvement in their conversion rates. And then we have to let our small businesses and our consumers connect, leveraging AI-driven personalization.
And you believe that, for example, using the data more effectively for particularly the merchant side can bring higher profit margins? I mean, how does this translate?
Well, look, we have over 35 million merchants that are using PayPal. When we improve their conversion rate, it improves their business, it improves our bottom line. we're kicking things off on the 25th.
I mean, you do have an awful lot of data. You ever consider just selling it or working with others as well to sort of pool that data in some effective way?
You know, the data is our customers' data. It's our consumers' data and our small businesses' data. What we need to do is leverage AI to make it better for them to be able to grow their businesses. Small businesses are under a ton of pressure right now. It is hard to be a small business in good times. It's not good times right now. We can give them an advantage. Advertising costs have gone up 2x over the last few years. We need to be able to give them the opportunity to leverage the data that they have and improve their business.
Right. All right. When you speak to investors now, and it also is encapsulated
I have a lot to say about this data thing. We'll let him finish, but I actually have a lot of thoughts on this.
to a certain extent in some of these analyst reports as well. Competition comes to mind, your lack of significant profit margin expansion and or actually lack of profit margin, you know, Apple Pay, buy now, pay later. Do you have an answer to these? You talk about what is a still relatively dominant position, but at the same time, it seems as though you've taken on a lot of business that doesn't really have a margin associated with it.
Yeah, I think we have done too many acquisitions over the last few years, and we've been defocused. It was one of the things I noticed when I came in 100 days ago. We've got a lot of priorities. We've narrowed those down, 5 key priorities, all focused on profitable growth. And so I think you'll see us start to move away from some businesses that we may have been in and really focus our energy and our efforts on building profitable growth going forward. It's going to be a lot of fun.
Meeting, and they're always explaining what.
Okay. So let's discuss this. I think there's a lot of stuff he said. I'm actually really interested about this. So, someone said in the chat, I think Josh said, leveraging AI translates to I need my stock to go up. 1000%. The reason why he's putting out this leveraging AI stuff and the reason why they're having some innovation day, which is probably going to be talking about all about AI, is because they need the stock to go up. And right now, whether you love it or hate it, the market cares about AI exposure. It is that I saw a clip on the Schwab network the other day of some like analyst who was like, oh yeah, we're bullish on Palantir. And the lady just asked him like some very basic questions about Palantir. And he just kept saying, you know, well, they're an AI play. And it was just me laughing as someone who's, you know, made 2,000 videos about Palantir, just like, if that's all you can say, we are at peak AI mania in terms of the market just wants exposure to AI because this random dude's like, well, they're an AI play. And he looks at the valuation like, oh, it's AI. It's only 40 billion. Microsoft's 3 trillion. Well, let me give it a shot. And that's just going to bring a ton of liquidity into some of these AI stocks, which means that Palantir even kind of shows some decent growth this year. I think they're going to have a really good year as well. Okay, so PayPal. One of the things he mentioned is that they have the most customer data in the world. He is correct about that. 430 million users. They carry out a large percentage of transactions when it comes to Venmo or PayPal, whether it's sharing money with friends or buying stuff on the internet or sending money across the world. That data, if it is operationalized in a sophisticated manner, and I think there's 2 levels of sophistication. Number 1, making the data more personalizable, if that's a word, to the end consumer in terms of how they're leveraging the PayPal to be able to spend and buy different products. And number 2, on the merchant side, if they can increase conversion rates for the merchant for merchants' websites because they have better data and they know, hey, this consumer is likely going to buy this thing at this moment. This is when you kind of edge them with the PayPal sign. This is when you show, you know, PayPal. This is when you put up the thing on their website to actually buy, and a variety of different ways in which PayPal can help those merchants understand better customer data. Even if just you give them a spreadsheet of like, hey, here are your customers. This is where they're from. This is how they're using PayPal. This is why they use it at this moment. And you give that data to the merchants. Maybe there is a way to increase the level of conversion on the merchant side while increasing the user experience on the consumer side that's using PayPal to have a better way of leveraging AI for the data. Let me give you an example that I'm just thinking off the top of my head. When I buy something with PayPal, I do not want to enter a code through my phone. I don't want to enter the password. I want it to be one click. It says buy, confirm, yes, boom, take my money, give me the product. If PayPal can figure out via AI that they can do less risk mitigation on potential fraudulent transactions to increase a better consumer experience, meaning, hey, Amit's on this computer that he always buys from. Let's not like ask him to give his social security number just to buy a water bottle. Let's just like let him buy it because there have been moments where I'm trying to buy something via PayPal and they're asking me for all this. I'm like, dude, like I use you guys. Like, why do you need more? Why do you need this fucking code from my phone? Like, you know, this is not like you should know that this is not something fraudulent. I'm not trying to steal my own data here. Like, just let me buy the thing I want to buy. That is a quick example off the top of my head. Maybe there is some level of sophistication they can do with the data that can make the user experience even better, and that increases the conversion on the flip side to the to the merchant as well. So from that perspective, look, I actually do think there is an AI play with PayPal if they can show in the numbers transaction margins can expand and the volume of payments can increase, even though the volume of payments, I don't think anyone's doubting is definitely strong. If that can get a little bit higher, I think the market will get exciting as well. The other point I was going to make here on PayPal is obviously the downgrades on the stock. And so what he says there is that they acquire too many companies. So they spent way too much money on just acquisitions because in 2021, cost of capital was low. So they were like, all right, let's just keep going. They have too many employees. He definitely said we have to right size the business. And he says innovation has been slow. So I think if we're entering into a post Alex Chris PayPal era where the stock's at this point, what, like 5-year lows, right? So it's like either you buy it and you make money or you buy it and you're stuck in a value trap. You've got to believe that the CEO is saying we're going to cut off employees and get rid of the employees that aren't working. We're going to save on our bottom line. We're going to increase innovation. So we're going to have tons of new products and services leveraging AI potentially to really enhance either user experience or build new products. And then third, we're not going to waste money on dumb stuff like acquisition. So we're going to protect shareholders' capital by making sure every dollar that gets reinvested into the business. The market, if you do a DCF valuation on PayPal, is valuing PayPal as having revenue of $29.15 billion and free cash flow of $4.46 billion for the next 10 years until 2033. If you do the DCF, you do a 10% discount rate, you adjust it 3% or discount at 3%, and then boom, you get to a price of $55. Right now the stock's at 60. If for some reason PayPal grows a little bit more than 0%, let's call it 8 or 9%, God forbid they get to double digits, the market's going to have to give them a premium on the valuation because the valuation it's not that it won't make sense. It like literally just, it won't be able to exist when you got a company growing like that. Like at some level, tangible book value goes up and people buy the stock. That's what we saw with Meta at 88. So Zoko says if PayPal uses the shop method, it will be major. That's what I envision. He was saying an app similar to Shop. Yeah, that's another thing, dude. Like, first of all, if they just grow a little bit, the market's going to give them the premium. Second of all, imagine they launch what Shopify is launching, which is an integrated network of connecting sellers to consumers, and then you being able to buy through their app. I don't know if PayPal will launch something called PayPal Shop. I mean, that'd be very innovative. I would allow, even if it's a risk, I would tell them to go for it. Like, imagine literally selling your shit through PayPal. The only reason they wouldn't do it though is because then I think, the merchants would be like, all right, you're competing with us. We're booting PayPal off of our Shopify platform, right? So there is a world in which it gets a little too competitive there. But they can definitely innovate in a lot of different ways. And I think if they do that, they're going to be in a good spot. Now, Apple Pay is definitely taking some market share. So is Cash App. So is the variety of other apps that exist in regards to taking money, which is what he didn't answer, right? When the interviewer was like, so like, what do you think about Apple Pay? And he's like, look, we just haven't been innovative. He doesn't have an answer for Apple Pay because Apple Pay is a monster. I use Apple Pay like a couple times a day. Like Apple Pay is an absolute monster. It's hard to take them down. But at the end of the day, I don't know if they need to beat Apple Pay in order to win. They just need to continue to grow what they're doing. And if they can, even with Apple Pay in there, then they should be okay long term. Okay, so that was the PayPal stuff. There's a couple of other things I still want to go through that's going on. Let's do a little bit of Tesla talk. We have Sawyer Merritt, who's a investor who was on CNBC yesterday, said a bunch of stuff about Tesla. I want to hear him real quick, and then we'll move on. We'll move on from there. Valeo says, I even forgot the login info for PayPal. Yeah, like it's stuff like that PayPal has to be able to get users to come back and get them into a better situation where people actually want to use it. Palantir's tank. Oh, actually, let's go to equities first, and then we'll go to some clips. Okay, so where's the market at? Tesla's down 214. Cellularity is up 56%. TFC is still doing well, baby. 1.94. I was just looking at their earnings kind of slightly, and I have some numbers, so I'll look at that. But TFC is up. TSM is up 8%. SoFi is down 741. SoFi is basically where it was yesterday. You thought SoFi wouldn't be where it was yesterday. SoFi is exactly where it was yesterday. So SoFi is down. And Robinhood is barely up. Nvidia still at 570, even though it's down from 575. S&P at 473. And Palantir at 1617. Wow, Palantir went down to 1615. You know what's so weird about Palantir? I'll have a lot to talk about in terms of what I expect for earnings, but it is so weird, dude. I literally think either we go to 19 on earnings or we go to 14. Like, I'm at the point where I don't know, dude. I don't know. There's so many arguments I can make for why Palantir is going to have good earnings. And then there's so many arguments I can make for why this earnings is not going to be the best and the next one will be better. I don't know. This is one of those where I just like, you kind of just want to wait and see. I don't even know if there's an earnings play to do here, because either boot camps have scaled, they monetize, and they're going to increase guidance for growth, or that didn't happen and the market's going to tank it. And I hope kind of it, I kind of hope like, look, maybe it tanks and there's just a better opportunity, because I believe in the long-term future and I wouldn't mind not having to pay 16 and paying 12 or 13. But do we get back to 12 or 13? I don't know. I think it's very hard to get back to those levels. Even if they shit the bed on growth, I don't know if the market takes it to 12 or 13. At this point, AI has just become too synonymous with the name. And, the market is going to have a hard time justifying that. Unity at $32. So we'll see what happens. But if you were thinking of doing an options earnings play on Palantir, I think it's just very risky. Like outside of cash secured puts, where you're happy to be assigned the shares at a lower strike and you take some juicy premium, that's fine. But outside of that, it's kind of scary, because you just don't have no idea, how it's going to go. Market is selling off a little bit right now for sure. All the banks are down for some reason. Look at Citigroup's down, Bank of America's down, Wells Fargo's down, JP Morgan. Wow, JP Morgan was at 176. Now it's at 166. So they took a beating. Costco's down, Enovix is down, Enphase is down. TFC is up. That is so weird, dude. What did they say in the numbers? TFC's up more than the regional ETF. What did they say that got the market excited? What did they say, dude? Like, their earnings can't be that amazing. Dude, I'm looking at their average deposits right now. It decreased 1.4% year over year. It also decreased quarter over quarter. Yeah, it went down $4 million quarter over quarter, $4 billion. So like their deposits came down, but the market is still excited. Like the market's still giving them a little love. All right, cool. Not bad. Let's get a quick Tesla update and then we'll go to banks. We'll go to banks. Here's Sawyer Merritt on what's going on with Tesla and why the stock is down.
Temperatures sparking a slew of discontent for some.
And also EVs and cold. I mean, this was a topic around Cybertruck and tires. So let's hear what he has to say here.
EV makers and their stocks. Deutsche Bank downgrading Rivian to a hold from a buy and cutting its price target by more than 30%. The analyst adding in a note that Rivian's push toward profitability, quote, may be slower than expected, in part due to slow production and prolonged factory shutdowns. Shares fell 6% today and now the same price as a year ago. Now, freezing temperatures, I mean super cold, in many parts of the country, especially Chicago and the upper Midwest, have led some EV owners to report less efficient battery range and charging. Of course, all batteries degrade some in very cold weather, just like your phone. Leave your phone outside for an hour in that weather, see what happens. But some of these drivers being frozen out are now making headlines. Shares of Tesla, the king of EVs, down 9 of the past 11 trading days. But there could be some valuable lessons here for newbies and current owners alike. So let's talk about it with Tesla investor and reporter Sawyer Merritt. He's got a huge social media following, does some great work on educating folks about this new way, really, of driving and operating. Sawyer, good to have you back on. The headlines, it's one charging station. Everybody's freaking out. Even as somebody who's been critical of certain parts of technology, I get it. And let's be honest, we have to better educate these owners and drivers, do we not, on how to prime their battery, preheat their battery, and how to better operate in these conditions.
Yeah, no, it's true. And it's in general, it's not true that EVs can't perform well in winter. The U.S. Energy Department actually says a conventional gasoline's car's gas mileage is roughly 15% lower at 20 degrees than it would be at 77. So some winter efficiency loss isn't unique to EVs in general. But I've driven a Tesla Model Y, and within the ambient air temperature outside was roughly like minus 22 degrees, and it was fine. 82% of new car sales actually in cold Norway last year were just all EVs. But I think consumers do need to know which ones are best suited rather for cold weather and how to use them. Teslas, for example, they have a custom designed heat pump that actually draws excess heat from the powertrain to maximize supercharging speeds and driving range in cold weather. And I just think in general, EV education is important, and people should precondition their Tesla's batteries before they arrive at the supercharger and to check beforehand that the supercharger is actually available.
Right.
I mean, look, he's making a decent point here. I think we got people in the chat saying that the defrosting stuff is a lot of FUD on Tesla, or the cold is a lot of FUD because there's a defrost setting. And you can literally defrost from the app. Yeah, I mean, there's not that many cars you can defrost the car from the app. You usually have to leave the gas running, and hopefully after 10 minutes it gets to a better spot. If that's the new narrative going on around EVs and Tesla, that it's cold outside, it is getting cold. Chicago's like negative -20 right now. It's pretty bad in the Northeast, at least. It was just in California yesterday. It was amazing. But in the Northeast, it's cold. But I don't think that's enough FUD to get Tesla stock to be collapsing. Right? I mean, that's just a little ridiculous, when it comes to, like, if that's the argument people have on Tesla right now, that's just not the best argument. But I guess that is something that is a narrative that's going on. I got to experience something in Tesla. Let me show you this. I was in Carlos's Tesla yesterday. I did not know you could control the air through the iPad or the screen. Look at this. Over this for the first time today. You can move the air on a Tesla right here. There's no little scrolly thing. You move it here.
There's no physical vents in a Tesla, so
This
you
is
basically
insane.
use the touchscreen to aim the jets,
And it just shoots the air. This is incredible.
and it aims the air where you want it to go.
I've never seen something like this. This is absolutely incredible.
Again,
Dude, that was crazy. I didn't know how you, because I was like, yo, it's a little hot in here. Can we put up the heat? It was just like, all you had to do is this and this and this on the screen. Like, here's the thing I'll say about my experience driving the Tesla yesterday, because I was there for a couple hours in that car. That is when I think you become a Tesla shareholder for real. So I had shares of Tesla stock, but I never spent that long in a Tesla. Like, I've been in a Tesla before, but yesterday I was in there for a good couple hours. That's when you realize the macro, the valuation, Elon fucking tweeting some shit. None of it matters, because that product is unbeatable in regards to the quality, the efficiency, the feeling. And you just can't imagine the stock price of some other EV manufacturer or some other car company outpacing that. Because when you see the level of innovation and technology, and I know it's something as simple as like adjusting the air, but they thought of everything in terms of making that car a rocket ship. You just realize, like, why would I want to buy Toyota? Why would I want to buy Rivian? Why would I want to buy GM? Why would I not want to bet on Tesla? And I think a lot of like the overall fears of Tesla, especially if it gets to juicier prices, they start to fade away once you've actually used the product. And I think a lot of people maybe just haven't used the product, which is why, analysts always feel some type of way. But when you use it, like, yeah, margins, they don't matter as much given when you see the product. Eventually, margins will taper out. I'm not saying they're irrelevant, but that product, there's no other product that's going to have better margins. It's just not. So it's it was really exciting. It was really exciting being in that car, seeing what was going on, and you think the story will play itself out, and you want to get some juicy prices. And this is what Kevin was saying yesterday. He was like, look, if we get some juicy prices, then I'm just like, there's no reason to not buy more, because the Tesla is the best car out there. That's it. Tesla is the best car out there. The computer on wheels narrative, this is being forced down our throats. I mean, look, you don't have to buy an EV. That would be my pushback there. You don't have to buy it. Carlos did say something that was kind of funny though. He slammed the pedal, and like we went to like 100 miles an hour, and then he got a little warning from the little dash cam that was like, hey, don't do that. Like, chill out a little bit. And so I was like, oh, so it's monitoring you. And he's like, yeah, there's a camera right there. If I like go to sleep or if I'm on my phone the whole time, I'll get a strike, because like it knows that like I shouldn't be doing that. And I was like, oh, that kind of feels like 1984. It's like, this car is fucking, but at the end of the day, I think the safety makes a lot of sense, right? Like, if you're just fucking around on your phone and you don't have FSD, like, yeah, it's going to say, hey, you're going to get into a fucking car crash. Like, chill out. Don't do that. And so there is a very nuanced way of how we think about these cars. But at the end of the day, I just don't see any other car company being better than Tesla. I mean, like, after really experiencing the product, like really feeling it, it made a lot of sense. It made a lot of sense to think of what Tesla's doing. What's the juicy price for Tesla? I think 185 is the real juicy price. This DCA is not horrible, but 185 is what I think most people are. And look, if earnings sucks, I think we'll get 185, which it might. But earnings might also not. Like, Elon says some stupid shit on the call. Like, if the call goes as bad as it goes last time, we might get 185, but we might not either. Okay, let's hear from Josh Brown and why he's bullish. After this, we're gonna go to Truist. We're gonna go to the banks. So for those who don't care about the banks, I'm sorry, but we got to look at the banks and see what's going on with the banks, because the banks do matter in regards to the rest of the financial sector. CleanSpark is up 2.5% on the day. Let's go to the miners real quick before I do that. Oh wow, miners are all green. Look at that. Look at that. We got some green. We got some green. Bitcoin's green. Miners are green. Coinbase is green. MicroStrategy's, wow, MicroStrategy up 4%. Wow. Dude, the volatility on MicroStrategy, if you're trading that sucker, there's so much money on the upside or downside. The only miner that's red is Hut 8 Mining. All the Bitcoin miners are green right now. Okay. Not bad. Even Robinhood getting some love, 1.46% as well. CleanSpark up. I think CleanSpark, look, I don't want to say CleanSpark has formed a bottom, but dude, it's down 30% in a week. Like, at some level, if there's a bull case for CleanSpark, I don't think it's falling another 30%, but We'll see what happens. Robin at 1082. Okay, here's Josh Brown on why right now is the time to still remain bullish.
Holtz Wealth Management CEO and a CNBC contributor. He is with me here at Post 9. It's good to see you. Welcome back. You think that's the case? We got all bulled up because of the way we ended 23. We came in here and thought, hey, this could be smooth sailing, and maybe not so much.
Let me answer your question with a question.
Yeah.
Do you think the market goes up because people get bulled up, or do people get bulled up because the market went up?
The latter.
Okay, I agree with you. Why wouldn't investors be bulled up? Did you see the way that market ended last year?
Sure.
It literally ended like the 4th of July. It was picnics and watermelon and then fireworks. And I don't know if you were an investor, what more you could have wanted to see. The VIX was just vol smashed almost to zero, and everything went up. Of course, people got bulled up. And that's quite all right. They should. I'd actually think there'd be something wrong if we had an S&P 500 finish the year up 25%, NASDAQ up 50%, and nobody was bullish. That would be problematic.
Yeah, but it's one thing to get all bulled up on July 4th. It's another thing to be all bulled up in March because you're waiting for the fireworks that may not go off yet because they're not supposed to go off yet. It's kind of what Jamie Dimon was talking about today out in Davos. I want you to listen to what he said about this idea.
I always listen to Jamie.
Market goes up and everybody gets bullish. Well, maybe that's a little too much. Listen.
I think it's a mistake to assume that everything's hunky-dory. And, and when stock markets are up, it's kind of like this little drug we all feel. Like, it's just great, But remember, we've had so much fiscal and monetary stimulation. So I'm a little more on the cautious side that we are facing a lot of things in 24 or 25.
I mean, maybe we're coming to grips with what we're facing. Maybe rates aren't going to be straight down. Inflation's not going to be straight down. Growth's going to be a little lumpy.
So I actually prefer my risk manager to speak the way that he does. Mm-hmm. I would be terrified if he were on the air saying, guns blazing. Let's have another breakout year like we had last year. That's not what he's supposed to be doing. Okay, this is the head of the largest deposit institution in the United States. It's a bulletproof bank. It should be a bulletproof bank, and the reason it is because Jamie Dimon is a risk manager first and foremost. That's his job. I'm glad that he's speaking that way. I hope most people are. That being said, what we're experiencing right now is exactly what you should expect after a rally as blisteringly hot as the one that we just had. So I want to walk you through a couple of things that we're looking at, and this is what we're talking to clients about. Okay. The first is the correlation between the VIX and the 10-year is at its highest level since 2018, back when the scariest thing in our lives was the trade war. Remember the trade war? That was fun. Okay. Anyway, the low point for this correlation was actually March of 2020 when it became apparent rates were going really low and not moving for a long time. Now we're back at a high of almost a 6-year high in that correlation. All that's telling us is that markets are getting a little bit shakier, but for the right reason. If you're seeing that 10-year note yield climb, it tells you that we are further away from the Fed looking to take policy down, and stocks don't love that, and that's perfectly fine. If we were selling off for any other reason, I would be singing a different tune, but that's really all that's changed. Nothing else has changed. We're back in an earnings season. So far, so good. The banks all had great things to say. We've got a lot further to go, but we are not experiencing a sell-off based on a risk to corporate profits. So it could happen. It's just not the story right now.
What about?
I actually really agree with that, dude. I really do agree. I mean, he summed up how I've been feeling over the past couple of days as well, which is that the sell-off is based on the correlation between the 10-year going higher because the Fed or the market feels that the Fed is not going to cut rates anytime soon. So if the 10-year goes higher, right now the 10-year at 4.1, remember the 10-year was at 3.85. Remember, like we saw the 10-year really fall off a cliff. Right now it's at 4.1. It's obviously gone up much higher than where it was back in like end of December, early January. That of course is going to cause stocks to go down because money's going to transfer from the equity markets into these bonds, or sorry, they're going to get sold off, right? So there's just not going to be that much liquidity going into the markets, but that's okay because that means that if the bond yields go higher, that means it brings more demand from equities into bond yields, which means bonds have been sold off. That is a reasonable reason to expect stocks to go down. What's not reasonable, or what's a sucky reason for stocks to go down, is corporate earnings get smashed. And we'll see. Banks were good. We'll see over the next couple of weeks how tech does. But so far, the market's not selling. And by the way, Mag 7, they're all at all-time highs outside of Tesla. Like, this is what I mean. Like, we're trying to rationalize why the market is selling off a little bit, but it's such a little bit. The rest of the market outside of like a few sectors are doing phenomenal. Like, it's like Amazon's at 150, Google's at 145. They're doing great. So the 10-year going up is a reason for why stocks come down, but that's a good reason for the stocks coming down because that's a macro reason based on interest rates and inflation. That's not a reason that's based on earnings by any sense of the imagination. So I think Josh Brown, absolutely 1000%, he's correct on that. I mean, he is right. If it was going down for other reasons, other than the Fed and the way the market prices and interest rates, that would be a little scary because then it's like, all right, what's going on here? Is 2024 going to be a tough year? But that's just not what's happening. What's happening is a broader decline just in the sentiment that the Fed will cut rates in March. And that's probably true because they're probably not going to cut rates in March. It's probably going to be a little later, which is okay, which provides some better opportunities to get stocks at cheaper prices, in my opinion. So that's probably what we're seeing happening right now. Okay, so we talked a lot about macro. Today's Daily Palantir episode will be a good one. I'll be breaking down everything that's going on in the world of Palantir, breaking down the interview, the book, all that stuff. So we got a lot to talk about on that. Let's take one last look at equity markets and then I'll get out of here for today. In general, we're green. Oh, I said we're going to look at Truist. Okay, so we'll do a high-level look at Truist real quick, and then we'll be out of here. PayPal at 60.78. SoFi sold off about at 1%. S&P still green. United green. Disney is green. Amazon green a little bit. ARK Innovation. Meta is up. Meta's at almost all-time highs. Coinbase is up. AMD 164. NVIDIA continuing to be at the 570 range. Roku is up. Square is up. Tesla still down 214. And Alibaba is down 68.50 as well. We talked about Alibaba last night on Finance Junkies, and Chris is getting a little bullish on some of these Chinese stocks. So we'll be diving deeper into them. I still just personally, I can't buy the Chinese stock. I'm just too afraid. Honestly, I'm just too afraid of buying some of those companies at these valuations. I don't want to have to keep up in my news intake with what the CCP is doing to make sure my money might not, go to shit. Not based on the company going to shit, but based on the CCP saying something. But the valuations are getting really, really attractive. Granted, I'm not making the trigger, but if anyone wants to get more DD on it, we'll probably be doing more over the coming weeks. CleanSpark up 3%, Microsoft at 391, and Palantir, where's Palantir? Palantir at 1635. Okay, so it's not as red as it was before. It's definitely not as green as it was before. Meet Kevin had some interesting things to say about Microsoft as well. You guys will see on the interview. It'll launch tomorrow, right after the market open. I'll publish it on the new channel, and so I'll launch it live for you guys. It's such a high quality too, because they had I was editing a lot. It's one of those interviews where I want to spend the money to build a studio like that because it's so high quality. It's just a joy watching it because it feels like you're watching like a crisp fucking interview. Like, it's just really good stuff. So I think you guys will enjoy it. Meet Kevin was saying yesterday that what was I talking about? I was just going to say something on Bitcoin, Tesla. Oh, on Palantir. He said Microsoft is fake AI. I mean, it was really funny when he was just like, Microsoft is fake. He's like, no one cares a shit about Copilot. He's like, Marcus is buying them up because they're afraid of buying other AI names. And so that was really funny to see. So we'll talk about that tomorrow, and we'll go deeper into that as well. Okay, let's talk about Truist to end it out. This is a big position of mine. I am up significantly on this position. I have not sold on this position. I have options for 2026. My strike is at $45. The other strike I have is $42. And I think, this is just one of those companies that I think it's very reasonable for it to get back to that $45 range, given it was trading at 64 for the past 5 years until Silicon Valley Bank happened. So high level on their earnings, they took a GAAP loss of $5.2 billion. Now, as soon as you see that, you might be like, holy crap, they lost $5 billion. What is going on? No, they had a goodwill impairment charge, which is one of those things you kind of just have to do as you're rebalancing the books, and it doesn't really affect your earnings, and that's why they had a GAAP net loss of $5.2 billion. If they didn't do that, they would have an earnings per share of 81 cents. So they would have made 81 cents per share versus lost $3.85, which is what is happening because of the impairment charge. So that's okay, not a big deal. Zelle transactions are up 43% year over year. Mobile app usage is up 9%. They have 4.8 million users year over year. Digital transactions up 13%. That means the bank's becoming a little bit more modern. And increase in client satisfaction with digital is up 7% year over year. Not bad. High level stuff, not bad. Revenue, they brought in $5.7 billion, which is less than the $6.25 billion they bought in at 4Q. 2022, but that's okay because we expected that. I mean, we knew that they weren't going to bring in that much revenue given everything that's going on with the markets and regionals. But overall, that's okay. $6.1 billion loss, again, after tax, the goodwill impairment charge. Revenue increased 0.5% quarter over quarter, even though it's down about 1.2% year over year. Net interest margin actually increased 3 basis points. A lot of people thought it might decrease. That might be the line right there that got the market excited. Truist is up 3% right now, and all the banks are down today. Again, Truist is up 3%. All the banks are down. I think that's the line that got the market excited, that their net interest margin may have come up a little bit. Cumulative total deposit beta was 36% over 35%, so that's up. And interest-bearing deposit beta was 50% versus 49%, basically flat. Nothing too crazy. Okay, average loans decreased by $5.5 billion or 1.7%. We knew this was going to happen, so that's okay. Market seemed to eat that up. Deposits decreased by 1.4% quarter over quarter. So we're at $395 billion in deposits. A year ago, we were at $413 billion. So it's down, but honestly, I mean, it's down what? $18 billion? Like JP Morgan, Bank of America, these guys have lost hundreds of billions in terms of money leaving the bank, but they have trillions, so it doesn't matter. So this is not that crazy of a decline. I think the market was just like, yeah, that's okay. That's not too bad. Sachin says, bought Palantir $19 call for February 16th at 45 cents. Sachin, when you say this stuff, you make me very bullish. I don't know, dude. I don't know if it gets to 19. If it does, it's, it's a very small, it's 45 cents is pretty cheap to pay for that. It's probably a gamble to an extent. But if earnings go well, look, I think either Palantir can go to 19 or it can go to 14. So we'll see, dude. We will see. I mean, like maybe that's the earnings call that Sachin is doing. Not financial advice to anyone else, but if you guys want to follow that one, 45 cents, $19 call, February 16th. Earnings is on February 5th, so that's about 11 days. Sachin is expecting the stock will rise because earnings will be good enough to warrant that. Mario says, when is the Meet Kevin podcast dropping? Tomorrow. Tomorrow morning, I'm going to put it on a new channel. I'll link it at the end of the stream. And hopefully you guys can subscribe to that new channel. That's going to be all sort of macro stuff, not Palantir stuff. And we'll just launch it on that brand new channel. Net interest income and net interest margin. Net interest income declined 0.6%, so very small decline. Net interest income declined 11% quarter over quarter as a result of higher funding costs. That makes sense. And then again, that reported net interest margin increased 3 basis points and it declined 27 basis points quarter over quarter. So I think the market liked that even in a very tough year, if you were able to increase your year over year net interest margin, which is the delta between how much money the banks make in terms of loaning out the money versus the interest they make on the money they have. If that's up at 2.98%, it's not amazing, but it's definitely not horrible. And I think that's the story of why it's up right now. I'll dive deeper onto this later, guys. I'll go deeper into the entire deck and we'll talk about it tomorrow. But 2024 expectations: grow in deeper core client relationships, leverage our more efficient platform, limit expense growth to 1% in 2024, increase capital ratios, enhance the client experience through their app. Here's another thing that they didn't mention. Make Jerome Powell cut these mother effing rates, because when they do, those loan losses on the books go down, tangible book value goes up, and the regionals have an amazing year. They should have put that. Now, they're probably not allowed to put that, but they should have put that. But that's like, you can get rid of all their stupid priorities. The only priority is the Fed has to cut rates, and then they're going to be fine. That's it. All right, that's it for me. Thank you, everybody, for being here. Please make sure to follow on Twitter. I've got a lot of stuff to tweet because I haven't been tweeting too much over the past 2 days, given I've been gone. A lot of stuff to talk about, a lot of market stuff to still cover. I will see you guys for the market close. Thank you all for being here. It's been 2 days. It's been too long. I love the show. The show has become part of my life, and I want to grow the show to be as big as it can. And so very, very happy that you guys came to join me again today. A lot of people, it's very humbling when a lot of people say that, dude, you're my morning coffee. I missed you. Like, what the fuck is going on? Why aren't you here? Even I was late. I was getting some DMs at 8:50. Like, yo, what's going on? You're missing a third day. So it just means the absolute world to me that you guys enjoy the show. And we're going to keep it going and see what we can do. And that's it for me. New channel will launch tomorrow. Austin Smith. I'll launch it at the end of the stream. So I'll launch it at the end of the stream. And am I doing another podcast with Steve today? I think so. I think we're doing Starbucks today. I'm pretty sure we're doing the podcast. If we don't, then it'll be probably tomorrow. But I'm pretty sure 5 to 6 or 6 to 7, we are doing the podcast today with Steve. So that'll still be live. All right. I'm out. Have a good Thursday, everybody. And I will see you in a few hours. And we'll talk then. I need to go get some breakfast. Bye, everybody. Talk soon.